avoid the losses. And in this environment, there are big opportunities if you're patient, right? And if you're willing to wait.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots, and I'm joined as always by the brain trust himself, Mr. Chase Taylor. This is one where so many different things to talk about today. Gonna have to dig our way through it. You know what I mean? It's a target-rich conversational environment. So why don't we let's get a rundown on the indices today, what happened, and then we'll take it from there.
Yep, S&P's closed up 0.24, the Q's up 0.16, small caps up 0.72, equal weight up 0.36, the Mag 7 basically flat. All world ex-US down 0.32. Kind of a rough week so far for ex-US. Dollar flat, oil up about 1%, but still under $64. Gold up about 0.5%. Miners pretty flat though. Same with silver flat. Pretty big move on the 2-year. 2-year was down 6 basis points as the cut odds kind of go back to kind of 90-ish. And then 10-year was down 3 basis points, 30-year flat. And that was kind of notable because the 30-year at one point was up like 3 basis points. It was starting to look like, all right, here we go. And then next thing you know, nope, right back to nothing. Nvidia basically was pretty flat on the day. We'll actually get those earnings today, unlike yesterday when I teased an event that was not about to happen. And then vol pretty flat on the day. Although vol picking up a little bit here.
So I forgot to hit the blue button. So the whole time you're talking, everybody's just staring at my mug, just looking off into the paper. So obviously Nvidia earnings, if they come out while we're talking, we'll address that. I would expect a beat.
Yeah, what's going to matter there is any guide they give on
forward.
It's on specifically on the China stuff. Like the reason I've gotten a little concerned with them is they went, the stock really took off whenever it was like, oh, like they're going to let them sell chips to China again, and then next thing you knew, China was like, yeah, we don't want them, and we know China's spinning up tons of Huawei chip factories and stuff. So like that excitement over new earnings out of China kind of turns back into probably not, so how much money they think they're going to make there is going to matter.
But here's the tough thing with China. Like, who knows if that is in fact the case, right? They might've been saying that
they put the H20s on ice because the orders collapsed out of China. So it's pretty clear they weren't joking.
Yeah, but what about the H100s?
The one they were allowed to send them.
Oh, okay.
Was the one that China was like, yeah, we're going to tell people not to get them. I figured they would still sell a good bit, but next thing you knew, they pulled. They was like, yeah, we're not even going to worry about it then. So their China revenue is definitely going to be less than we thought a month ago.
Okay, all right.
And that you're talking billions of dollars. So it will be interesting to see what they have to say about it.
Yeah. You and I were alluding to this, and we didn't really get we switched topics, so you and I didn't even finish talking about this. But, and we'll have to see the way the stock performs. But it is interesting to me, just all of a sudden out of nowhere, and I think it's kind of amusing because this is kind of how we thought it would play out. But Google, right? For seemingly no reason, all of a sudden people are like, "Oh yeah, Google's going to be a big deal in AI," and you're like, "Yeah." And Chrome's not worth nothing.
Right.
You're like, yep.
They obviously didn't invent AI, but the modern LLM was largely built on their technology. So
yeah, I've never understood how they've gotten left out of the AI, craze. But it does seem like they're starting to get the attention that it seemed they deserved.
And it came out, I think it was last week, that Apple very well may end up using Gemini as their AI driver. So, we got the sell off when it came out that they were going to stop using Google search maybe. And the next thing you know, like they may plug into their model for AI.
It's really strange, at least from the people that I've talked to that are very well connected and are in a place to know. The atrophy that Apple has, taken on or endured or gone through over the last 10 years, it's really mind-boggling. Like when I said, I've talked to several people in the know that are very much a part of and plugged into that world that just say, oh, Apple's a joke. They have no capability. They don't have the talent in-house to code this stuff. Like and you're looking at it going, how did you've seen it happen a million times, but it is amazing to sit there and see how that train just left the station. And it's why you and I, their stock ran up on we're going to get our own. You're sitting there looking at them going, guys, why are you believing them? They haven't been able to execute on anything. If you think they're going to, when their best innovation in the last 10 years is AirPods, and you think they're going to jump in there and compete head to head with the best program developer, the best software engineers in the world, you're out of your mind. There's no way. And that's what he said. He goes, they're total afterthought. Nobody cares. Unless they buy something, they're completely out of the running.
Yeah. I mean, until they prove otherwise, that's pretty clearly the case.
But I don't even understand the messaging, man. 2 weeks before that announcement of them talking to Google came out, there was that release that they had out saying, we're going to develop our own or something along those lines.
They were doing their own like sort of LLM stuff in-house.
And then within 2 weeks, it goes to, we're going to adopt Chrome.
Although that was the report about them, not like, a press release from them being like, hey, look at us, what we're doing. They weren't even talking about it, but.
And then again, it's just this market. We've talked about it. And then that Chrome is worth nothing. So we're going to value Google like Chrome's worth nothing. I shouldn't be complaining because the one beautiful thing about this market is if you don't look a gift horse in the mouth and you don't get too smart by half, it throws unbelievable opportunities in front of you that are really fat pitches that are fat pitches in a way that don't really make any sense.
It may take some time, but eventually in reality, we'll pay you.
And that's the other thing I got to keep in mind too, is that I think this is one of those critical times, and there's been many of these in the past, but I think one of those critical times of the shorter your time horizon is right now, I think the more at a disadvantage you are.
It's one of the only edges left, I think,
I agree.
For people is to expand that time horizon.
Yep.
And man, if you look out 5-10 years and you think about the way a lot of things will look, and then you look at the market, like there are significant opportunities.
Oh, beautiful opportunities. It's just not the one. And this is, and if people are out there struggling with this, trust me, I get it. But there is that struggle of, yes, fundamentally speaking, that is an unbelievable opportunity. The question is, will I have any clients left by the time that cash is in? And I just think you're at that point where, and we've talked about this many times, but I just think you're at the point where you have to take that risk, right? Like I think the opportunity is too great. I think the discounts on some of these things are just way too deep. And I think it's at a point where you're kind of looking at an opportunity. You're like, well, let's see. And then all of a sudden, we all know that line. All of a sudden, a price drops to a certain level where you're like, look, this might go lower, but I can't risk the chance of missing out, right? Like I got to buy this now, right? Compelling buy. I was actually having a conversation with our real estate guy, the rep for the privately held real estate fund we use. That's actually posted a positive total return over the last 3 years. They're really good risk managers. They just stayed away from all the speculative stuff, the office buildings. They divested the majority of their office building portfolio by 2017. And I was asking him, I was like, you guys have got to be licking your chops at the opportunities out there. And he goes, we're buying as much as we can, and I say that because it goes part and parcel with what we're talking about, which is, avoid the losses. And in this environment, there are big opportunities if you're patient, right? And if you're willing to wait. if you're looking for 40 to 50% pops in a month or a week, like you've seen around, best of luck to you. I just think that right. I think there's so much real value lying around. I think it is unjustifiable to be making bets on multiple expansion. You know what I mean?
Yeah. Well, in the US at least. Yeah.
Yeah. In the US at least. Yeah. I mean, that's not necessarily.
Maybe the best bet on earth is multiple expansion in, a basket of 15 countries where the multiple is under 15.
Let's throw right off top. Or maybe not even multiple expansion, but significant market growth in Chinese equities.
Right. Just both.
Really interesting stat that Jamie, what our junior analyst, threw at us the other day on our investment call that I thought was intriguing. And it didn't surprise me at all. But it was saying of the several times that Chinese equities had run 40% or more in a 12-month period of time, the average rate of return over the next 12 months was like in excess of 50%.
And I think a lot of that is sort of that
stimulus response.
Big part of it, but also like the domestic investor, they enjoy being a part of those. And I think you could see that even more pronounced this time, because if you think back to those prior episodes, like, owning a flat had a pretty solid return to it. Now it doesn't. And that's where most people save their money. Obviously, a savings account pays you nothing because rates are basically nothing in China. So like we used to talk about TINA in the US. There is no alternative to owning equities, right?
Yeah.
Because there's no rates. There's no point in putting in the bank or buying T-bills or you get to this no kidding TINA thing domestically for Chinese, where why would I not just buy that? At least I'll make some money.
Yeah.
I'm not gonna make money in housing or savings account. So I could see it turning into a bit of a bubble, which would be, I hope it doesn't, because I want to, play this thing for a long time and like have it grind higher, not just supernova where we have to just get out and then, wait to do it again some other day. But I do think it is possible that you get kind of parabolic bubble, unless, they lean on it on the other side. Because, they have the national team that goes in and buys when things are really bad. Maybe the national team can, feed the ducks along the way to keep it from getting out of control to the upside.
The mythical plunge protection team.
Yeah, they have a very real one there, which everyone knows about. But so the national team, as they call it, is going to like give some back every time it wants to get too spicy. That would actually be a pretty solid public service for what could just turn into a nasty financial stability problem.
Yeah. Okay. So of all the other things to discuss too, like I said, there's so many, I don't even know which angle to attack it from. So I guess we are now all part owners of Intel.
Congratulations, I suppose.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
I was on an hour-long podcast interview earlier today, and we talked about this at length. Pardon the yawn. This is a tough. I think this is a complex one for me. And so on the face of it, just the face of it, I love the idea of the American taxpayer having upside in a company that we have invested in. This ain't going to be a Solyndra, right? This isn't going to be so many of these other situations where, we saved companies and, we were profitable from much of the transactions that occurred in 0809. But I like on the face of it, I'm like, good. Okay. If we're going to do a deal with them, the American people should have some upside. That being said, it makes me extraordinarily uncomfortable that the federal government has a 10% equity stake of common equity, even though it's non-votable. I have it is not confusing to me at all why Intel would want this deal. If I was CEO of Intel, I'd want it too. I just think it has the potential of setting up some very dangerous dynamics. And you and I were fleshing this out earlier, but let me give the listeners a good example of what I mean. I'm not saying that this guarantees outright corruption. What I am saying is that now you've got a vested interest. And the scenario that I rolled out earlier was like, hey, I'm the CEO of Intel. Call up the White House. Hey, are you guys aware? You guys do a lot of business buying Palantir software. Are you aware that they refuse to buy our chips? Can't lean on them a little bit, right? And then you've got an issue here, like Munger talks about, the incentives, right? That congressman, and rightfully so, could easily justify sitting there going, well, that's nonsense. You're sending that money. They're sending to Nvidia. Doesn't put any money in the U.S. taxpayers' pockets. Send it to Intel. And that's the part of like what I like to call soft corruption that people just don't. It's like it's all or nothing. You've got to have a tinfoil hat on if you see any type of conspiracy or playing behind the net. But I always look at them and I go, listen. One of the reasons I am always distrusting of government, and I'm always suspicious of government, it's not because I think everybody in government is bad. It's because everybody in government's a human being, right? And when you've got the Intel people that you're used to talking to, and the American taxpayer owns a 10% stake, that's enough justification for a lot of moral people to sit there and go, you know what? I am going to give them a call. Palantir ought to be buying your chips. Here's the problem. That ain't a free market, right?
Thumb on the scales, big time. And thumb on the scales at scale, won't work. So that's where the slippery slope part does get concerning. And it'd be one thing if they did MP materials and then Intel and they were like, cool, we're done. Like we just thought chips and rare earths are just so important. We had to step in here and help more. But, the current rhetoric is like, oh no, we're going to do a bunch of these deals. We're going to get the defense contractors in here. We're going to do this and that. Like at some point, and I've been making this comparison, of kind of mid-century Argentina, the birth of Peronism, like, nationalization, taking stakes in companies, like you are on a very socialist path.
And this is a classic example, and I'd encourage everybody that tends to be on the more right or conservative side of the aisle, push it through this test, right? This mental test, which is looking at that and going, look, on the face of it, I 100% understand and don't even disagree with the ethos that drives ideas like this. Okay, for instance, look at a company like Lockheed Martin. Okay, I don't know what the mix is, but I got to guess 80 to 85% of their revenue annually comes from the United States government. Probably something like that, right?
Yeah, it sounds, it's high, obviously.
The idea that the American people get a kickback off that investment makes all the sense in the world. I get, again, though, the question is, at what cost?
And we could save that money by just giving them less excess money in the contracts they already get, right?
Or here's an idea, right? You could even maybe spice up the contracts, maybe even give them a little extra incentive, but maybe there's this. Why not bust them up into 3 or 4 different companies?
Yeah, that's what we talked about this morning. If anything needs the antitrust, it's that industry.
Right. Compete against each other.
Speaking of, so when I was
but to be fair though, the tough part about these conversations is that whatever you do, it's kind of like taxes and Social Security. Whatever you push forward, you're going to get lambasted.
Right. There's no constituency for the thing.
Right.
That needs to be done.
Right. But my knee-jerk reaction is sitting there looking at this and going, hey guys, I understand what you're trying to do. And if that is inherently what you're trying to do, and I'm going to take you at face value, I think that there are ways to do it that do not offer nearly as much potential downside or potential disruption or Here's the other thing. Trump has talked about, and this very much would align with that, right? The idea of a sovereign wealth fund. And I don't have the answer to this, but we were discussing it earlier. I don't know that a sovereign wealth fund is constitutional. As a matter of fact, I would venture to guess it probably isn't.
It's tough to have a sort of a executive branch slush fund, right? Like that is, it's difficult to You definitely need congressional approval. It's already come out that it's been slowed down and kind of gummed up because it needs congressional approval, and perhaps that's not coming.
Yeah, and it opens up all kinds of other issues. Like if you look at like the Citizens United case, right? Which basically, now for any lawyers out there, I'm sorry if I'm just completely butchering this, but my understanding of it is effectively, it sort of came down to what a corporation is, right? It's a person.
Right.
Okay, so could the government cut a deal like this with an individual human being? No. Everybody would be like that. That would be like way outside the pale.
Never mind that a corporation is just a collection of humans. Yeah.
Right. But what I'm saying is you can't sit there and use that justification for a decision like Citizens United and say, no, they are an individual, and then turn around and buy 10. That just seems like a big issue there.
Right.
Right. And my question is, again, I'm not trying to lambaste Trump or say that it's un-American or anything like that. What I'm saying is I understand what you're trying to do. It appears to me that this seems pretty kind of haphazardly thrown together. And I don't think enough. Well, and when something comes together that quick, there's no telling how long they've been working on it. But I'm looking at this going, this feels a lot like shooting from the hip. And this feels like not nearly enough time has been discussed about what are the long-term implications of this.
And, does it make a big enough difference for them? Probably not. And now to be fair, like whether it's an equity stake or just the subsidies they were going to get anyways, like what I'm about to say applies. So not just the equity stake, but when you start picking winners and losers in this way, do you start commanding political loyalty from them too? Does it become like a thing where like, I couldn't help but notice that your COO is a Democrat, like what are we going to do about that?
Right.
There's so many slippery slopes where like, that's why to me, you need like that some standoff wall between corporate America and political America. Like there has to be a firewall there, because if they bleed into each other too hard, I mean, all you got to do is read about the worst governments in history, and there was no wall, right?
Well, yeah, and the other side of it, to push back against Trump, I don't think that I'm the first person or you're the first person that's brought up or brought up the concept of one of the biggest issues I think we've got in this country today is the enmeshment, right? The collusion of private industry with big government.
Right.
Right.
Not a new problem by any stretch.
No, it's this unholy union though, right?
Bigger.
It's this bastardized form of capitalism that isn't either. So it's corporate socialism effectively is what it is.
I mean, the old definition of fascism before we just turned it into authoritarianism was that corporate
private
government,
private businesses federally directed. Right. Yeah. And that's very much that.
You can't use that word anymore because
it's been bastardized too. It means nothing. And you ask the average person, I know what a fascist is. It's Trump. And you're like, okay, no, you don't. So that's not what a fascist is. But that's the cruel irony is you sit back and go, hey guys, quit trying to point it at the politicians. Look at our economy. It's getting to the point where it's very much like it's starting to look a lot like the fascist economic model.
Yeah.
And I mean,
and in some ways, like I get it. Like the need for industrial policy clearly is there in some ways, like because we're getting our butt kicked in really important areas of building things, right? So on some level, you got to do something. So like when the MP materials came out, I was like, yeah, we absolutely need rare earths, and those we're way too dependent on China for those and the magnets downstream of that. So you got to do something. And at first, I even applauded the equity stake, and then the more I thought about it, I was like, you know what? No, like just say, here's a pile of money. Go get us the magnets. Here's your pile of money. We'll overpay. We understand that like your profit margin is not going to make sense for you. You won't build the mine.
We'll cut your red tape.
So yeah, exactly. We'll road grade the road in front of you, and there's a pot of gold at the end of the rainbow. But we need those magnets.
Yeah.
Versus like, oh, like here's billions of dollars for your shareholders. Like maybe not. Yeah.
And instead, you're just getting a double down of this unholy union between big business and government where nothing good can come out of it. And like I said, I understand what they're trying to do, and I don't disagree with the ethos. I'm just, and the other thing that bothers me is this is a step in the wrong direction, in my opinion. Meaning we need less enmeshment.
Right.
The other thing I would like to see is I would like to see the administration. This is a big issue, right? Effectively reindustrializing the United States, right? I would like to see a presidential board of advisors put together where some deep thought with some really critical thinkers goes into thinking, hey, how do we do this? What's the best way to do it while still honoring our economic system and actually, holding true to our campaign promises too of making it more competitive, more capitalist. But I really think that this is one of those things that requires our best and brightest looking at it and working on it and thinking about the upsides, the downsides, all the unforeseen issues, right? Like this is going to be complicated. And especially doing it in a way that honors the Constitution and our system. And, of all the things that scare me the most, that it's not about one administration or the other. What I am increasingly getting afraid of every single day is the erosion of constitutional powers, the way that they're laid out, right? That scares me.
I mean, yeah, same. It keeps me up at night.
I know. And I had a discussion while I was on a fishing trip with my boys with a couple guys, and we were up in Alaska, and we were discussing this topic. And once again, it points to a failure of the education system for me, because I hear all these people saying, I want socialism to fix this problem. And I go, okay, guys, here's the real critical question that we got to grapple with. There are two ways to run about running a society, essentially. There are the ways in which you put supposedly the good of the collective above the good of the individual, which always sounds more attractive in the beginning. And then there's the system that puts the right of the individual above the right of the collective, right? And what time has shown us is that neither are perfect, but the one that puts individual rights above the good of the collective has been better for the individual and the collective, right? Anytime we have bastardized or diluted that, it has been worse for both, right? Flip over and look at the one that puts the collective in front of the good. We don't have any positive long-term outcomes doing that. And so it's not that we've got this way that is painless or that we've got this way that is defect-free. It's just that the cost is much lower. And that's the thing that is so frustratingly sad to me, is that you have all these people that do not understand that.
Right.
And that giving up personal liberty is never a solution to fix a short-term problem or even a long-term problem. That's not a solution.
Or to give legislative power to the executive or like any of the other kind of pure constitutional things we're talking about.
Well, what does history show you? History goes, oh, yes, you're definitely going to give up that liberty, but the chances of you getting the payoff you were promised are next to zero. Right. At least the total amount that you were promised. Right.
Over concentration of decision making into fewer and fewer hands. Like the problem with it is like eventually the few hands it's left in makes a big mistake, and then everyone pays immensely for it.
Yep.
So that's kind of the point of decentralization is,
or they don't make a mistake, which I think is what's going on now. Is they just start unapologetically betting their own number, you know what I mean? Fishing behind the net and doing what works for them.
Yeah.
And, an example of this was, and again, I don't know this specifically, but to look at a government scenario, and I don't care which side of this argument you're on, if you can't recognize the incredible conflict of interest here, you don't want to. But the idea that Anthony Fauci was running the CDC while receiving substantial amounts of money, to my understanding, in excess of $1 million a year in royalty revenue from Big Pharma off of patents that he had filed at some point. How in the world is that possible? And it's not even me saying Fauci's a criminal. I'm not even personally going after him. I'm saying, how in the hell do we have a system that allows you to be head of the CDC, which one of the things, you're kind of like a watchdog of Big Pharma, right? One of the things. And yet you're getting paid millions of dollars. Like, how is that possible?
Yeah. I mean, it's just, It's the way we're doing things now. I mean, if you remember when Elon was made head of Doge, and they were like, "Hey, isn't it like a little bit of a conflict of interest given some of the stuff he's going to do and some of the companies he runs?" And they literally said, like, Elon can decide himself if it's a conflict of interest. Like, that's not how.
No,
that's not how this works.
No, but to me, it's a little bit different. Meaning, he wasn't sitting. I mean, I understand the comp, but he wasn't sitting there deciding who was going to get federal government contracts, right? When you're talking about the reduction in government spending, I think that the bar is a little bit lower there on it. Like,
but he had his hands. He was able to access very important data on competitors.
Well, yeah, but he was a presidential advisor.
Right.
He never got given any real power.
No, but like at the same time, if you're given really important data that no one else can see, it's not public data, like government data on competitors, that can be very helpful.
Oh, no, I can see that. I mean, I don't think that there is proof that was going on, or that there was proof that he was farming it that way or looking at it that way.
He tried to get some contracts from like FCC and stuff during that time.
Oh,
So I don't know. I think
I'm not absolving him either.
The point isn't that. The point is that they said he can decide if there's a conflict of interest.
Well, yeah, that's absurd.
Like that's not how that works.
Yeah, that's absurd. Like I said, I do think making recommendations about what programs to cut, though, is different than what we're talking about. Meaning,
that's not how I see it. We're literally talking about the enmeshment of large corporations in government. And then here you have the richest guy in the world who's running, I don't know, a half dozen major corporations, given very important keys inside of government. Like that's literally what we're talking about.
Well, I know, but I mean, okay, but I don't disagree with what you're saying. I don't think I'm articulating my point very well. This is not new. JP Morgan had access to the White House.
It's extreme.
And unbelievable levels, right?
Oh yeah.
There's tons of examples of this. And furthermore, it's probably impossible to have very competent economic advisors as the president of the United States that won't at times have conflict of interest. By definition, you're probably dealing with very, very successful, powerful guys, right? Where I look at it is I just sit there and go, okay, well, if you want to let that guy do that, that's fine. Nobody elected him, though. Whatever he does or doesn't do, we're holding you accountable for, right? Your job as the government is to make sure that he's not getting that information.
I think that's the problem with government now, is like accountability just in general.
Oh, on both sides, meaning whatever serves their political purposes, it's almost like there's no rules. Right. And even if they get red-handed, as long as they were carrying the company line, they've got their defense paid for. They've got people backing them up. It's just
no
a
one
mess.
gets fired and no one really resigns anymore.
No, there's no need to.
Yeah,
there's no need to. Man, so many other things. We're already running long though. Anything else you want to get to? We'll carry some of these things. Want to talk about Nvidia earnings? Have we heard anything out about that?
I don't know if anything's come out just yet.
I feel like they always take a very long time to report.
Shares fall after chipmaker gives a lackluster revenue forecast. Have we ever seen them give a lackluster
down
forecast?
3%?
Beats on top and bottom line. Data center revenue surges 56%, but tepid revenue forecast, fueling concerns that a massive run up in AI spending is slowing. That might have some QQQ consequences, which is a nice alliteration as we move forward. We'll see. I will say this. I think the IWM versus Qs ratio can work for the first time since I can't even remember, because of if AI spending really is slowing down. My assumption is it's not that AI spending is a problem. It's that their China revenue is a problem, but we'll see.
Yeah. I don't know, man. Like we've said, this is
speaking of Cuppy's AI piece, just kind of showing the napkin math on how much money they got to make to kind of make the CapEx spend make sense. When you just do the napkin math, it's pretty wild.
It's a Facebook problem to me. I'll explain what I mean. It's a Facebook problem to me that is really catching me off guard that nobody's thinking about. When you listen to everybody talk about what AI is going to make so much money on, we're years away from that part of it, right? Years.
And that's people that can just plug into the commodity and not necessarily make the commodity.
Right. And there's a huge difference there.
Yeah.
Right. when you start looking at what and look, I don't think either one of us are diminishing at all what we think the AI.
Oh gosh, no.
I'm as bullish.
We just talked about the education thing.
Yeah, I'm as bullish and transformational on AI. When I say bullish, I'm where it's going. I have incredible reservations about the dangers it brings into play and all the potential downsides and all that kind of stuff. My point is, I'm all about the hype relating to what the capability is and what it's going to be able to do. Here's the thing. When you look at the money being invested, it is really hard to see true positive returns on those investments in the next 5 years.
When you read Guppy's piece, like it just feels like there's no way. I mean, because the spend is just so big, right?
It's so big.
And if you
also think that some of these AI applications aren't going to cannibalize existing business lines that they've got, that will happen.
For sure.
Right. And so it's not just all additive. Like AI is truly creative destruction, meaning it's going to blow as many things up as it helps.
Yeah. I think the bet has to be that it reaches this weird escape velocity where you have robots that build robots where it becomes like an Inception thing where
it's like a technological Russian doll.
It's so productive that the conceptual view of investment won't matter because it'll be so productive. But man, you better land that plane, because if not, then you look and you're just like, we spent how many hundreds of billions?
Well, that's what you're pricing in, right? I mean, that's kind of the thing that makes me nervous as a golfer. It's like, I'm teeing off on a big par 5 that's got a pond in front of the green. And we're not placing bets on who's going to get the best score on the hole. We're basing bets on all or nothing bets on who's going to get there in 2 and who's going to sink the eagle putt.
Yeah.
Right. We're
third place ain't getting the trophy in this game.
Right. Yeah. Right. And that's the thing where I'm like, wait a second, birdie isn't good enough. In this case, when you look at the valuations, birdie isn't good enough.
Right. You better be right that the super intelligence thing is real and you can get there, and that you're the one that's going to get there first.
Yep. Here's the other thing that you and I both know. Several companies will go under because of their AI spend.
Right. Exactly.
I'm not saying FANG. I'm not saying.
Well, it could be. I mean, it could be though. Like,
could be.
If someone goes in hard enough.
Well, Facebook taking out $30 billion in debt. Now, their balance sheet can take it.
No big deal yet, but if they're all,
it's real money.
If we keep growing that capex by some factor, well, then 6 quarters from now, they're not. They're borrowing a lot more than that. Because so far, like these giants have been able to just do it out of cash flow, like whatever, right? Or just rip it out of Silicon Valley's piggy bank. But
you end up with the classic over engineering problem, right? Which is, dude, look what this car can do, and you're like, yeah, but it's $12 million, dude. Who can afford it, right? Yeah, you made the best car in the history of humankind, and you've got about 3,000 people on the face of Earth that are potential customers.
But I will say, as a way to think of it the other way, is I remember thinking of Uber this way. It's like it was obviously Silicon Valley subsidized, right? My view was like, okay, well, as soon as like the jig's up on that and they have to make money, I couldn't pencil out how they could. Well, here we are, like Uber's profitable, and like so maybe it just works out. But
yeah,
or maybe they get to the point where the chips get so efficient so fast themselves, and the power systems get so much more efficient than now that like the capex it goes up a curve, but then comes flying down a curve.
But that's the other problem,
because that is how tech often works.
It is. But when you think about AI's ability to adapt, think about so for instance, when somebody gets a breakthrough and they patent it via their AI, think of how much faster other AIs are going to be able to figure out workarounds around that patent than human beings were able to. Do you know what I'm saying? Meaning the other thing I think you need to think about is I could see a world in which AI has in most applications. And the reason I say this is I don't think anybody's thinking about the competitive aspect of this. AI is going to be really unique in the sense that 3 companies in the world aren't going to own it, right? Like I don't think they're going to be able to contain it that way.
Right. They just may be like the salt mine that generates it, but
yeah. I think I think it's highly probable as well. Not only are they overshooting, but I think that estimates on margins for a lot of this stuff, I think, could be way overcooked. Because margins, you got to have pricing power,
right? And the the competitiveness of this is going to be just crazy. It's going to be like railroads where like, cool, everyone built a railroad, but.
Well, look what they're all saying. I mean, they're all saying, look, we don't care about the balance sheet or CapEx, right? And so that attitude is going to have to carry over to how do they price their products because it's a land grab. They're trying to get as much.
And right now it costs virtually nothing to get amazing output.
Yeah.
As soon as you put a price tag on it, if the competitor doesn't, then most people are going to go, okay, well, I don't need that one anymore. I'll use this one.
Yeah. I just think that this is, and I think it is a little bit different than other scenarios, right? Like for instance, even go back to the tech bubble. Okay. There was a bubble there, collapsed, okay, but let's take a look at it. Look at we were talking about fiber optic cable, companies like Global Crossings that went under because they were laying all this cable, all that kind of stuff. That cable is still a really big asset. And cable at that scale is virtually impossible for any small operator to come in and pick up. You know what I mean? So meaning there's still a big barrier to entry in those. There is none on this stuff. You got to get the compute, but there's places that rent it out. I mean, that's far more accessible than it would have been in the past. I just think holistically, I think you have priced this to a point where it's going to have to be a disappointment, at least in the short to medium term, as far as revenues and profits go. Not because it's not going to be game changing, but just because I just don't see how it's going to live up to the hype in the next 5 years.
Right.
As it relates to the profit it creates.
As it relates to the profit it creates from the people spending all the money on the CapEx.
Yeah. Yep.
Some people might make insane profits, but it just doesn't seem like it's going to be these CapEx crazy people. Maybe we're wrong. Who knows? We'll find out. We'll
find out soon enough. Anyway, all right. That does it for us today, you guys. We got 7 more topics we didn't get to. We'll cover them tomorrow. And also dig into the Nvidia earnings and give you kind of more of a detail on what happened there.
Down 3.5% as we close out here.
There we go. Well, my first glance would be whatever it is has to be pretty benign.
Yeah, still interesting to see Nvidia down on earnings. That's
true.
That in itself feels like a little different.
Yeah, it's like Santa Claus in June. You know what I mean? Anyway, so have a wonderful evening. You can find us on social media as always. Go to YouTube, Know Your Risk Podcast, knowyourriskpodcast.com. Subscribe. Always helps us get on more folks. And anyway, the interviews are pushed off till next week. I've been one of the biggest problems. Trying to get this stuff in at the end of August in this industry is just a waste. I should know better by now. If I go back and look at my interviews, like the 3 months over the last 10 years that are by far less interviews than any other time, summer months, right? It's just hard to take. So anyway, we finally sorted it out, got it on the books for next week. But anyway, so yeah, don't want to miss that. Have a wonderful evening. We'll see you tomorrow. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.